Thanks everyone. A lot to cover today and a super interesting topic as well. So before we dive right into it, as I said, I'm Tom Digby. I'm here representing Invesco on behalf of their ETF business. Today we're going to explore how integrating AI and digital investment vehicles on an institutional framework basis can really help grow cross-generational wealth in the family office space. And we've got an excellent panel here today to discuss that, representing family offices, digital wealth, as well as a wider sort of ecosystem on the trustee side. So instead of me introducing the panel, let's start with brief introductions from yourself, team. So just by way of kicking things off, perhaps just introduce yourself, your role within the business, and potentially how your organisation in the family office space or supporting family offices is evolving in the digital landscape and your approaches to wealth management. Justin, perhaps you kick us off.
Sure. My name is Justin. I'm the principal of Kingsley Holdings. We're a single family office based here in Hong Kong. We're a little different from other family offices in the sense that our risk is really dialed up. Our risk tolerance is high. The mandate for my family is to grow the wealth, not preserve the wealth. So from day one, I've always implemented an endowment-style approach to asset allocation. Over half of our positions are in alternative assets. The two biggest buckets, I would say, are hedge funds and PE direct deals. And in that space, our sweet spot is really kind of like growth to later stage companies. On the public market side, we deal with about 6 custodian banks. So we're pretty active, I would say, in cash equities trading and equity derivatives. So on that note, we use a lot of digital platforms to try to minimize the human interaction as much as possible.
That's great. And yourself, Jonathan?
Hi, this is Jonathan Wu, Wings Capital Ventures. I wear 2 hats, our family office, which does multi-asset allocation, and I also take the VC strategy out of our family office and set up this VC fund. We're the VC fund, we focus on fintech and AI applications and Web 2.5, which Web 3 technology is being adopted in Web 2.0 across Asia. In the VC fund, of course, we look at a lot of fintech solutions that serves family offices, asset managers, brokers, financial institutions, and many of them are trying to crack the family office digitization trend, which we can share within the panel later. Thank you.
Hi, I'm Helen from FGA Trust. I'm the strategy officer. So as you may know, trust is a very traditional and very time-consuming business, but we provide a digital trust platform that you can just have the real-time technology into one secure platform for you to protect, manage, and grow your health, grow your wealth and maybe health at the end, across borders, of course. Thank you.
Hi, this is Archit. I co-run Saif Hong Kong business. Saif is a digital investment platform. So we have a holistic platform across discretionary portfolios, traditional cash management solution, as well as brokerage. We work with clients across the spectrum with people investing as low as $100 to tens of millions of dollars. We have about 500,000 clients on the platform, and including some of the family offices, giving them the right access, advice at an affordable price.
That's great. And maybe I'll turn to the two family offices on the panel first of all to kick things off. And let's start off by talking about today and setting the scene. So Justin, how is your family office at the moment currently adapting sort of traditional wealth strategies into incorporating digital tools, AI, and what are the biggest benefits and challenges that you face in this space, whether it be on the public side or more towards on the alternative side that you mentioned during your introduction there?
Sure. So Kingsley, we're a very lean team. So as I said, dealing with all these banks, I try to move things online, digital platforms as much as possible. Dealing with humans, sometimes there's human error. Sometimes if you're calling to place a trade, they're not there at the desk to pick up. Or sometimes we have to read a risk disclosure that takes many minutes, and the price always moves away from you, right? The price never moves in your favor. So as much as I can, I try to do things online through digital platforms. But you have to keep in mind there's no perfect digital platform. Each bank has their pros and cons, their flaws. So with UBS, for example, I've been their beta test client for their online platform for many years now because I'm such a heavy user. I would give UBS a pretty good rating. I'd rank them probably A-. I can trade most asset classes on their equities, fixed income, FX bonds. I can choose my settlement date. I get real-time pricing. It's linked to the research portal. It's all very slick. So A- is a good grade from them. Where I would ding them on really is for their hedge fund NAV kind of like pricing. I just checked yesterday, my Millennium and my Elliott positions at UBS are still using August NAV dates. So it's 3 months old. We're in November, guys. So, not perfect. Most improved in terms of digital platform, I would say is HSBC. And I know HSBC is a big sponsor today, so I need to be careful what I say. But if you asked me this question 3 years ago, maybe 5 years ago, I'd give them a C-. I'd give them a solid B+ now. You can tell over the past few years, HSBC really spent a lot of capital in investing in their technology, their infrastructure, their UI, UX. It's all very slick now. The one thing that I would ding them on is really, so what's impressive is I can now price and trade equity derivatives on HSBC's app. The flow products like FCN, fixed income notes, and also ELN's equity linked notes on a lot of underlyings. However, they built in a really large buffer / commission in their app, up to 200 basis points. So they're charging 2% for an ELN. That's wild. So if you price the same product on your phone versus pricing it, emailing your banker, you get very drastic different results. So innovative, yes. Practical, no. I would say most disappointing, unfortunately, I have to say is JP Morgan, and I know my JP Morgan team is here today, so again, I have to watch what I say. But I'd probably give them a D-. And I'll say this, on JP Morgan, I can now trade FX, but I can only do T+2 settle. That's very impractical. You cannot do T+1, you cannot do T+0. And from a credit facility usage perspective, they immediately discount and debit any cash outflow, any forward cash flow, any future cash inflow. It doesn't necessarily reflect in your credit usage allowance, especially when it comes to structured products. That's a problem for me because I'm a huge structured products trader. The other thing I would add is that for JP Morgan, from a credit usage perspective, it doesn't count their own liquidity fund as liquidity. So JP Morgan does not count JP Morgan USD liquidity fund as liquidity. I'm like, guys, the answer is in the name, liquidity. But that's still not as bad as Morgan Stanley. Morgan Stanley to this day in Asia, you cannot trade online. Morgan Stanley owns E-Trade. They have the technology, but they haven't even implemented it in Asia yet, so that's really disappointing. But moving beyond the mobile apps and platforms, banks, they can now use WhatsApp to do trading. So yesterday when I was here in the conference, I actually was placing orders with LGT on WhatsApp. I did like an XAU risk reversal. They use companies like Symphony and Global Relay to make sure everything's very compliant. So yesterday during the trade, their gold trader stepped in the conversation, gave me live levels. I was able to execute immediately just through WhatsApp. Now, moving that whole side, we've now started working with a lot of digital-first wealth management platforms like Endowus. Super happy with them. They're disrupting the industry. The reason why we work with Endowus is on their platform and on their shelf, they have a lot of hedge funds I can't find anywhere else. So I've been looking for the 0.72 trillion AI-themed hedge fund for a while now. Endowus had it. So from the onboarding to the fund subscription to now the position monitoring, it's all done online, very slick, very seamless. So those legacy players have to watch out.
Yeah, I think the legacy players comments you mentioned right at the end there is really prevalent, and dealing with family offices in general, with so many bespoke demands, so many asset classes on offer, so many different structural setups, whether it be single or multi, is quite a different thing for any sort of wealth or digital distributor to deal with. Archit, maybe just bounce it straight over to you on this sort of point. You guys are at the forefront of this and really trying to break down the traditional barriers that some of the banks and dealing with that interface struggles. How do you guys think about that at SIFE, and what are some of the challenges that you've been specifically trying to solve for in this space?
Yeah, I think historically how the wealth within family offices and broadly was managed is changing drastically. I think with the evolution of information, with the evolution of digital technology, a lot of people, a lot of clients we speak to are very digitally native. And I think it's a well-known research report that there's a huge transition of wealth, intergenerational transition of wealth going to happen in the next couple of decades, and a big part of it, about 5 to 6 trillion, is going to happen within Asia in next 5 years, and that transition also means that the people who are going to deploy is the new generation of Gen Zs who are again, naturally digitally native. So that kind of pushes the boundaries of somewhat what Justin was saying. Like, I think lot of the new way of managing wealth doesn't need human touch points, and people don't want it. So that's where I guess like platform like us, like we started out of Singapore about 6 years ago, have tried to break that space, disrupt that space. I would say we are still early in the game. There's a lot to do. Now, specifically where we work with family offices and high net worth individuals is, like, I would say, like, access is what again was limited in the past to alternates or even fractional trading like 6-7 years ago. Is now given. We and other platforms have tried to democratize that, but I think what's still largely missing is the simplicity, is the advice angle, where still I think a lot of family offices we deal with are not deep into investments. They want to run their home businesses, doesn't want to speak to people, and are willing to let somebody else manage it. But they are digitally native, and they want that ease, they want that simplicity, they don't want the hassle, they don't want to go on fancy dinners, get F1 tickets. They just want their wealth to be managed, whether preserve or grow. Again, that personalization element comes in play. But I think that's where the world is shifting, and as that, again, the huge chunk of wealth transition happens, the need for digital wealth management platforms comes into play. The second point I want to make is, I think, that point about personalization. Like, we understand, I think, especially as we go into high net worth individuals and family offices, the personalization level becomes even more important. Now, with the technology, with AI, there's lot we are trying to build. To give some examples about, our clients can within the app, again, self-serve, have tools, can filter on their interests, can filter on the news, doesn't need to have tons of just random data feeding in, can get portfolio analytics, again, which helps them to see things in a simpler way, in a neat way, and can then obviously take decisions and act on it. So that personalization, and with the ease of digital nativeness, it very easily flows into, and again, like, we are still early in days in this, like other digital platforms as well, but I think this is the way we feel it's going to be, how things will be managed in the next 5 to 10 years.
Yeah, fully agree with that. From the product side of vehicles that we issue in ETF format, we're definitely seeing that stretch of wealth, and it's becoming a lot more challenging for us to deliver content that's consumable in that space, because what you're delivering to discretionary portfolio managers on the family office side that want an in-depth knowledge transfer, white paper, statistics behind all that, versus what you're going down onto the other side, which is more consumable, readily available, frequent content, is quite a challenge. And it's interesting to see that, as you mentioned, the first order problems of things like of just the trading setups need to be solved, and in some regards in the banking space, you've already said actually some of those banking providers are not right there just yet, but you guys have solved that when it comes to things like fractional share dealing. So it's really interesting to see how the diversity of offerings that exist today are current in place in the market. Jonathan, just going to come over to you at this point. What do you think is going to be the sort of biggest thing that's going to impact this in the next 5 to 10 years in family offices? We're talking about at the moment generally sort of public market, very transparent, easily available data and liquid investment. When you start to think about non-traditional channels and blockchain, decentralized finance, crypto and being involved, how do you think that starts to play out in the next 5 to 10 years? And what are the sort of 2 or 3 things that family offices need to sort of be aware of from your experience?
Thank you, Tom. So I think before I answer your question, maybe I can give us a more high-level view of how family offices differentiate from each other, right? There are family offices that only does investments. There are family offices that have a traditional business with cash flow coming in regularly, and then also do investments, right? And then by its name, family offices have a lot of personal flavor. So the way it works, the investment focus and strategies really differ, for each of them. And then you talk about like future 3 to 5 years on digitization, crypto, etc. I think the last panel covers a lot on the allocation part. So maybe I'll talk a little bit about the digitization part, right? So I think like Justin mentioned, if you look at like secondary market stuff, liquid stuff, a lot of banks or in crypto, maybe the exchanges or similar players will be able to support and provide that kind of digital platform. But on the private side, if you look at some private funds, a lot of the investment work, deployment side, onboarding, KYC, AML, is still very manual. I think there's a lot of room to improve. But having said that, because of different family offices style, there's not going to be one solution for all. Maybe we can start with, like from a fintech perspective, maybe they can start with selling to multifamily offices who are more like asset managers, and then integrate or spread this kind of adoption to single family offices. I think that's the trend in the next few years. As a VC fund manager, we also look at, or we also see a lot of these solutions in the market trying to crack that family office space, and it's pretty hard. Not many as good as Saif, I guess. Many of them have a challenge of customizing solutions for different family offices, which is not always economical, or the unit economics may not work very well. So I think that it takes time to evolve. And then if we go to the AI topic, obviously everyone uses AI to do research. And some of that, like drafting reports, etc., investment memos, that's the easy stuff. But it's hard to get the AI into the workflow in terms of first screening opportunities, analyzing it, presenting internally, and then deploying the capital, monitoring it after investment, and then the distribution part. So I think that's the kind of deep water area that may need more than 5 years to tackle. Yeah. So I'm going to pause here and pass it back to you.
Yeah, I mean those are super interesting points, and I think actually Helen, coming to you in a second on that. As Jonathan's sort of rightly mentioned, there isn't a sort of one-size-fits-all approach to every family offices, and there's various different techniques. From your side of things, you face a sort of a unique governance and compliance challenge when you're speaking to your family office, trying to build those frameworks on the governance side of it. How do you really help family offices maintain that robust framework that they need to their stakeholders?
All right, so when we talk about the family offices, as Jonathan just mentioned, because they're like highly volatile, and also they're like personal usage, and they're really like a lot of requests will flow in, like maybe on a periodic manner, or maybe just on a single day or hours. So that can be really random and sometimes really regular. So from my perspective, because of the family offices, they have their own governance, means their guidance, and also the governance matrix. So what we do is to blending the innovation part into the governance, which is very important, because Justin just made the formal complaint on the stage to say his ratings to those platforms, and we try to make it more comprehensive and more real time for our clients, because we, FGA Trust, we serve families and corporates. Like traditionally, families, they make decisions based on the periodic reports and very manually executed by the institutions. They put down the instruction, right? And now it doesn't work, because in today's technology and the economy situation, it doesn't allow you to act that long, like wait for the paperwork and also wait for the periodic report. So families now, they want to achieve the capital efficiency more than any other year, right? And they also want to be productive. They want to feel safe and secure at the same time. So they need a real-time technology to show that where they are. Like they need to see, like visually, they need to see, and they can demandly to say, oh, I need it right now, because my next action to the current market situation is the next minute. So here comes the innovation. So because a lot of people talk about AI in this stage and other stages, so far we don't heavily invest into the AI tools, but we integrated AI power tools to effectively reduce our admin overhead by 30%. So that's the fresh figure we just got for the Q3. So this is very impactful for our families and the corporates we're serving. They love to see the real-time visibility, and also they want to go back home, sleep well, knowing that their assets, their data, especially the governance structure are all in place. They can just feel confidence to use the platform.
And that's it sort of circles back to your original point, Justin. I mean, you're a family office that tends to take on a fair bit more risk, and obviously that risk has to be, constrained to some extent and controlled by some extent and visible. How do you think about these new frameworks that are coming out there and the integration and management of that from your perspective?
Yeah, so from a risk management, we don't really use AI, to be fair. I mean, I wish there was a better answer for you. We really don't. I mean, as John mentioned, there's no kind of perfect AI kind of workflow tool that I've encountered as of yet. Having said that, we are investors in XAI, so we do use Grok, so I got to plug Grok. I mean, document summarizing, investment memo writing, that's excellent. But in terms of workflow or risk management, I just haven't found that right solution just quite yet.
So interesting one for the entrepreneurs in the room there, that there seems to be that gap in the market at the moment. AI is really just coming down the research channels as it is today. So Jonathan, from your perspective on these sort of sides, how do you think about the risk management frameworks within your business, especially managing that public side as well as the VC side on the private? Are you engaging with the trustees on a regular basis to build up these governance frameworks to report back? How do you think about the risk management space when it comes to integrating some of these new digital tools that are available?
Well, on the risk management side, I would say maybe our family office is not as advanced on digitization. We're still pretty, manual and, the traditional way. Ideally, we would love to have more risk management tools to support at least the public market side, which may have more solutions readily available. But if you combine with the private side, it's a little more difficult because, first of all, private valuations only mark to market on a periodic basis, not a daily basis. And then when things move, volatile, it's hard to manage the risk with public, private, and also crypto together. So I think that's that's something we need to improve on, and maybe many family offices also need to think about this. Yeah.
So I guess that's sort of a leading question straight into Saif, right? I mean, so how do you come up and think about product in that space when there are so many different asks, so many different setups? We've talked about single, multifamily, we've talked about investment family offices, we've talked about preservation of capital. How do you come up with an all-encompassing offering that also competes with the banks that already have some of these people that are involved in the process?
Yeah, I think the first thing is I think we can't solve for everything. I think we have to accept that we can't solve for every single use case out there. So now I think if we go deep into what are the things that most or majority of the, I think some of the things which we are hearing right now about risk management, about data, I think those things are solvable, especially in public markets and to extend some of the private side as well, like alternates, hedge funds, and all. So I think that evolution is already on its way. On our platform, we do provide data analytics about the portfolios that you invest into, again with insights around risk and all, and actionable insights as well. So that helps you, if you're adding a new portfolio, how does it change the metrics of your risk? If you're removing or unwinding something, how does it impact the liquidity as well? So those kind of things are solvable. But yes, I think we have to understand that at least in the near couple of years, certain things will be very hard to solve. And we believe if we can solve 90-95% of the use cases, we are getting there. And then that 5 to 10% of personalization will evolve, will be an evolution which will come in 5 years or so.
That's great, and we got sort of 5 minutes left here. So just as a sort of final thoughts across the panel in this space, looking towards the future, how do you think that industry collaboration is going to drive things forward? You know, we're talking on other panels earlier about AI speaking to AI, AI coding for AI. Like, how does collaboration work across different AI work streams, but also how does it work across different businesses implementing different solutions? Helen, maybe start with you.
Yes, because we're a platform. So we just have the interaction of different financial institutions and our clients, which are the family and corporates. So we have everything automated. We try to. I have to get a disclaimer here. We try to get everything integrated into one platform so the API fits from the trusted financial institutions. So that's the first thing to kick off the whole integration thing. And also we use the AI-powered tools, including the very dummy ones to eliminate the repetitive works, which you may also use, right, every day in your everyday life. But in the corporate setup, we need to make sure that everyone has the accountability of the AI-powered or AI-enhanced procedure, which is a streamline because the workload is more flat. So you need to make sure that accountability is actually acknowledged by each of the level of the workplace. So that's about our FGA Trust. Yes.
And Jonathan, sort of the optimal business model in your perspective, if you think about the future?
Maybe I would twist the question in another way, right? So my prediction on the trend in the next few years for family offices digitization, I think is largely hinged on the large amount of wealth transfer across generation, globally and especially in Asia. So when you have younger generation, taking charge of the family offices, maybe more open to hiring professionals, because the older generation tend to rely more on family members, right? So when family offices become more institutional, and then I think the digital adoption will be accelerated than before. Yeah, so I think that's the important trend from the family of user side, I would say. Yeah.
And Justin, yourself?
I think I would just say the banks should continue using me as their guinea pig, as their beta test client for free. I'm clearly very vocal and unfiltered, so I'm always happy to give feedback.
That's great. And Archie, just final thoughts from your side in this space, interesting takeaways that from the panel today. Scalability, optimization of processes is certainly going to be key to the development of this space going forwards. Any thoughts on what you see the optimal collaboration and business model going forwards in your business is?
Yeah, I think in this first wave in last few years, I think something Jonathan touched a bit upon as well. Like, I think multifamily office adopting digital side is faster than single family offices. Very natural, as well as they are more focused on asset allocation. They have their own expertise in-house investment team who knows what to do, but don't want to invest in the infrastructure, don't want to invest into digital side that much. So leveraging platforms like us becomes much natural, much easier. I think that next wave, which we have started seeing a bit, is going to be single family office. But I think the thing we were discussing before about the personalization, whether and to what extent, again, each family office will have their own needs, and how much and which platform can cater to what is going to drive that adoption. For sure, the opportunity set is huge as the digital nativeness of the new members of the family who's going to manage the investments in the future. So that opportunity set is huge. It's for platform like us and banks to act fast and see where we go.
So in summary, sort of scalability, whether it be in services, whether it be in products being offered via the banks, or whether it be in the digital wealth distribution model, it is going to be critical. But personalisation still remains a pretty key point to everything that we do today. So. I thank my panelists very much for their time today, and thank the audience for listening. Thank you very much.